Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto.
Okay, so let's get to the technicals for Bitcoin. I think maybe 46.4 to 46.5 is the key downside level to watch. Obviously, it's 200-day moving average, and that's what traders look for the emergence of a new bear trend. We are obviously way above that, so at the moment, there's no sign of a bear trend emerging. If we have a look at the monthly pivot point, we were well and truly rejected from the monthly pivot point, and also we've had a look at the current weekly pivot point, and so far we've moved underneath there. So all the time we're under 51,450, expected bearish bias in the market. If we have a look at the key upside targets, if we were to move past the 52,000 level, so you're really looking at 53.2, which was a key former low in the market, and 55,000, which you may remember last Friday when it started to break, it kicked off all the technical selling, and obviously once we saw 53.2 go, then that was just the end of it, and traders just bowed, and we saw the massive move lower. So for me, probably need to see daily closes under around 46550 on a multiple day basis for the market to have a very bearish bias, and we can see the chances of a test of last week's low significantly increase if we see that. And on the flip side of that, if we were to see daily price closes above 53,200 on a multi-day basis, I would expect to push towards 55.6 and the test of the very, very important 57,400 level. Okay, so let's get to Bitcoin on charts now. So I think one of the things that we probably need to do is break down one of the reasons why the market went towards 42,000 last week, and some of the reasons why it might have happened. I guess this is a precautionary measure just to stop it happening again in case we see any of these clues lining up in the market. So if we look at 42,000, I think I've touched upon it before at a previous webinar. It was also where we had our very successful signal where we bought from 42,000. And we rode that up to around about 65,000, but we ended up getting out the market at around 60,000. If we have a look at the reasons why, you can see here, obviously, a former all-time high. It's moving down to a very important swing low area in the market. You can see here, it's very, very technically important region. The market has been testing it constantly. And for me, I found it very odd that the market broke through 47,000 last week. I thought the move lower extended much further than it probably needed to. So that's making me very cautious. But the fact that it come down and almost perfectly tested the former all-time high there, it does make a lot of sense. But again, it was a very, very overextended move lower. But I just come to basically explain the reasons why the market tested down there. And of course, if we were unable to break underneath the September low, then that's another reason why we could have potentially pushed back, as well as holding that 42,000 area. So if we have a look at how things stand at the moment for Bitcoin, we can see this falling wedge pattern. We were looking for a breakout to the upside last week, so we've broken underneath the wedge. The market has come up to test the wedge. It hasn't been able to get above there. So if we are able to move above the 52,000 level, it makes a lot of sense to me that we're going to test back towards the top of the wedge pattern. As I said earlier, probably around 55,000, probably topping out close to 55.8, something like that. If we were to move back inside the wedge, let's not forget this very important trend line. After it broke in the summer, obviously the market collapsed. So at the moment, this is a very important trend line in the market, and it's holding so far. So maybe we'll get up and have another test of there around 52.8. So those are the things that the market are looking at the moment. And I guess we've got a bit of a sandwich effect going on between the 200-day moving average and this trend line and wedge pattern at the moment. So we probably need to see a move above either side of the wedge or the 200-day moving average to get another shot at lower or higher. So we can expect some cautious trading in the market until we start to get past this very, very important technical area. If we have a look at clues in the market, also why Bitcoin broke down, I think there's a strong case. If we look at this pattern and on the lower time frames, it did look like a possible distribution, Wyckoff pattern playing out. And if we have a look at where we are now in the market, I think we can see that if this is what the market is potentially looking at, and we've obviously broken down sharply to the downside and we've come up and had another look, I think a strong case exists for the market to maybe come up and test up here and have another look, which is basically what it's doing now. And there is the chance of this market absolutely collapsing lower. I think we shouldn't forget in the backdrop there that we do have a head and shoulders pattern, much like the crypto total market cap chart that we looked at earlier. So there is a strong case that there could be a head and shoulders pattern emerging. So for me, we need to take out this high to really eliminate those risks in the market. But if we were to make a new low underneath the September low, then I think the case is quite strong for a bearish head and shoulders pattern playing out in the short term. So I guess all the time, this risk in the market of this Wyckoff and this head and shoulders pattern, I would say playing out to the downside even further, we do have to be aware of that. I guess as well, something that I'd like to note is that Fibonacci Extension analysis earlier, we looked at where the market could be going to the upside. So if the market was to break sharply to the downside, I think it's important to look at the sequence that the market could be looking at. Similar earlier, we were looking at 3.6 trillion in the market. So for me, I think this is a very obvious breakdown point in the market. So the high and around the 55,000 area, we've broke down and we've come back up to retest it and the drop-off point there. So I think this is where we're going to start our Fibonacci extension sequence. And I think the first target for the market was around 46,956, and we didn't quite reach the 1618 extension target of that sequence. So all the time that we're trading below, I would say the 57,000 area, which is very, very technically important. There is a risk of this sequence playing out towards 38,794. So I would say do watch out for that. And again, bear in mind what I said about the Wyckoff pattern and also the head and shoulders pattern. Now, the interesting part for me, if this pattern was to play out to the downside, I almost dare not say it, but if we have a look at the final targets of this sequence, if it were to play out to the downside, you can see the type of big numbers. Not only is this sequence looking at, but also the head and shoulders pattern. It will be looking very, very close to those numbers at the bottom. I'm not saying that's going to happen, but I guess it's my responsibility to tell you that all the time that the market holds underneath the 57,568 level, that there's definitely an outside chance. And obviously what we need to see for that to happen is for stock markets to move lower. We probably need to see some type of big risk event in the market, maybe some type of event like the China Evergrande really spooking the market, or some type of default scenario in some emerging market country where the US dollar goes crazy and obviously risk assets sell off sharply. So that could cause this type of sell-off. But at the moment, I don't think there's any great need to worry, because obviously we've got these significant lower highs in the market. And I would say the lower lows in the market rather. So if we were to break the sequence of then and reach this target here, I would be getting nervous. But at the moment, we're still very much in that middle ground for Bitcoin. So overall, Bitcoin needs to anchor itself back above the 52,800 to 53,200 area to really get the bullish bias going. The structure of a large inverted head and shoulders pattern that we've been looking at over recent weeks, it still remains intact, and is pretty much targeting towards the 80,000 area. In theory, Bitcoin is still making higher lows on significant pullbacks, so we don't need to move into that panic mode yet. And there's still a strong case for the market heading higher. I think the potential still does exist for a stronger pullback, and we do need to acknowledge those risks in the market. There's obviously bearish patterns that could be unfolding in the background. So overall, I would say keep your eye on the 200-day moving average and that 52.8 to 53.200 area. Okay, so let's have a look at Ethereum now. So Ethereum, we've come back, and not perfectly, but almost perfectly. We tested the bottom of this wedge pattern that we've been looking at. So the momentum from the wedge pattern has been dying over recent weeks. I would say we had a good shot at the top. We couldn't break it, and the market's obviously come down to test lower. Last week, I guess we're looking for a final test of this shoulder pattern, and obviously the market pulled back a lot more than what I expected on Friday, and that's overshot to the downside. We do have a signal for coins on the move that got activated. It's been there for a while, from around 3,600. So we're leaving that open just to see if the market does shoot to the upside. But I think it's still pretty unclear for Ethereum, although the target of this pattern that's been invalidated, this large head and shoulders pattern, still remains at $7,000. Again, the risks are quite high in that we do have on the lower time frames, although not as bearish as Bitcoin, we do still have this head and shoulders pattern lingering over Ethereum. So Ethereum very much needs to take out that kind of 5,000 area to invalidate this and make a definitive breakout. Otherwise, the risks are quite high for a sharp move lower. I think probably the sensible thing with Ethereum, if you aren't either long from 3,600 or you're not short from around the highs of the year so far, we probably need to see a breakout above this trend line or a breakout underneath this wedge. If you're not in a position in the market, then that's probably the sensible thing to do. So wait for a breakdown, and we could see some significant downside. Again, if we break to the upside, I think the chances of moving towards 7,000 are pretty high for Ethereum. So overall, Ethereum, it still looks very undecided after the recent pullback. Bulls who bought around the 3,600 level are in a good spot. Equally, bears who sold around the 4,850 area, the 4,850 area, they're also in good standing, and there does exist a possibility of a price collapse if Bitcoin and the market were to head a lot lower. I think if you're not in a position in the market waiting for a break of the 3,600 to 4,850 area, is probably going to be a wise move, as you're pretty much making a bet on the direction. You probably need some technical confirmation. And I guess we need to acknowledge that the head and shoulders patterns are forming on the lower timeframes. However, we do have an invalidated head and shoulders pattern that still projects 7,000 for the market. And that's one of the great things that I think that the market is still pointing towards 3.6 trillion. So we do have to respect that. So there's probably more evidence than not that 7,000 is still possible.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.